प्रेजेंटेड बाय ईबिक्स कैश, हर खुशी के लिए काफी है।
Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Let's take you through the headlines tonight. Profit booking on the Lal Street as the Sensex plunges over 400 points. Nifty ends below 17,750 mark. Oil and gas, power stocks gain. Broader markets underperform. Good news in store for air passengers. Civil Aviation Secretary tells exclusively to Business Today that flight fare ban could be soon gone. We get you an exclusive conversation with Munjal Shah, Director of Paras Defence, on the bumper IPO. Petrol and diesel prices hiked again as crude oil soars above $80 for the first time in 3 years. Analysts predict more pain ahead for the consumer. The centre dissolves Ordnance Factory Board with effect from 1st October, also transfers OFB assets, employees and management to 7 newly formed public sector units. SEBI in its board meet today cleared the framework for the formation of a gold and social stock exchange. They've also amended the existing framework for delisting of equity shares pursuant to an open offer. In the list of things announced by SEBI, the establishment of a social stock exchange will help in reviving the economy by boosting investments in social and environmental firms in India. Apart from this, SEBI also proposed a framework for gold exchange and approved investors' charter for the securities market. Investors were in for a roller coaster ride in trade today. The Sensex swinging over 1,000 points. At one point, profit booking had pushed the Sensex down over 1,000 points, giving investors jitters. Sensex at close was down over 400 points, slipping below 60,000, settling at 59,666, and the Nifty slipping 0.6% as well, ending just below 17,750. Bharti Airtel, the biggest laggard of the day on the Sensex, followed by Tech Mahindra and the Bajaj Twins. Meanwhile, on the other hand, we also had Power Grid Corporation, NTPC, Sun Pharma, Titan, and Kotak Mahindra Bank, some of the names that managed to hold out today. 2021 has been a year of many firms getting listed on the stock market, and while headlines have dominated by the likes of Zomato, there's a much smaller public issue that caught everyone's eye. I'm talking about Paras Defence and Space Technologies, whose IPO received a very strong and very positive response from investors. The grey market premium for Paras Defence quoted at 235 rupees over the IPO price of 175 rupees at the upper end of the price band. Joining me is Munjal Shah, the MD of Paras Defence and Space Technologies, to talk about the huge demand for shares of his company and his own entrepreneurial journey. Mr. Shah, thanks so much for joining us. Let me first congratulate you about the fantastic issue. Did you expect this kind of response?
Thank you very much for giving us this opportunity. Very honestly, we did not even dream about it, or never we even thought about it. We are working very hard to get this process through. So never ever we had imagined, nor we had even thought of this kind of a response, and still not able to believe it.
And explain to our viewers exactly what your company does.
So we set up India's most unique nanotechnology machining center. So this is probably India's first nanotechnology machining center, which got deployed for manufacturing of optics or lenses for night vision and thermal imaging systems. So this is our main line of business, manufacturing of lenses for defense cameras and also for space cameras. Today we offer lenses for all range of cameras, smallest to the biggest. And while doing this, we started also doing designing of lenses, and then progressively we started doing designing of the entire camera system. So today, Paras Defence is able to offer the complete solution, and mostly everything manufactured in our own factory. And today we take up like very challenging camera systems, what nobody or many or very few people in the country would like to. So to give you an example, we are currently making a camera along with a defense lab for spaceborne. Like, this camera is going to be deployed into the space. From there, it's going to be doing the imaging. So this is the main line of business of the company, making lenses and also now doing cameras where we have no clash of interest with our customers. Besides that, we are also into defense electronics, heavy engineering, and our latest vertical is electromagnetic pulse protection solution. EMP is like, the future warfare, and we are the first company in the private sector in India to offer this solution on turnkey basis, and a few more things that we are doing.
Mr. Shah, thanks so much for joining us, and congratulations once again on a fantastic issue. Now, Aditya Birla Sun Life AMC IPO is raising about 2,768 crore rupees. It opens tomorrow. The joint venture is offering shares in the price band of 695 to 712 rupees. 3.88 crore shares equaling 13.5% stake in the company. The issue closes on Friday. The company is the largest non-bank AMC in the country. Small investors have to bid in lots of 20 shares, with the minimum investment being 14,240 rupees. The AMC has assets under management of 2.94 lakh crore rupees. According to analysts, though grey market premiums are falling, the stock will be a good long-term buy. Prices of petrol and diesel have been hiked once again across India after a short lull. This is the second hike in 2 months for petrol and the fourth for diesel. And the bad news, there could be still more sticker shocks at the pump for the consumer, as Goldman Sachs has forecast that crude oil prices could rise to $90 a barrel versus $80, which we've seen previously. Here's the story.
Petrol at 100 rupees a litre. Once a joke, a dig at governance. Now, not only is it very real, but it's unlikely that prices will fall to the double digit anytime soon. These prices were again hiked across the country Tuesday morning. 20 paise for petrol and 25 paise a litre for diesel. The reason? A spurt in the international prices of crude oil. From a low of $23 a barrel in May 2020 to $55 in January and $73 in August. The price today was $80 a barrel, a rise of 45% this year. For the consumer at the pump, the only thing that matters is the impact on the wallet.
धंधे में बहुत असर पड़ा पेट्रोल डीजल दाम बढ़ती महंगाई है ना खर्चा तो वही है और इनकम तो जो पहले का पैकेज था ये सब को वही सब कंपनी वाला दे रहा है और ये सब डीजल जैसा पेट्रोल ये सब तो बढ़ ही रहा है
लगभग 800-900 का बढ़ोतरी मतलब 5000 के लगभग में गाड़ी टाकी फुल हो रहा है तो प्रतिदिन दिन पे दिन बढ़ाया जा रहा है मेरा कहना है कि ये तो बहुत ज़्यादा हो रहा है नहीं होना चाहिए सरकार से कुछ है कि इसका कुछ डिसाइड करे देखे
The finance minister is between a rock and a hard place. Killing off the goose laying the golden egg is not an option for her. But neither is ignoring the rising anger among the common man. Taxes, after all, account for more than half the prices of petrol and diesel. In Delhi, the central government excise on petrol is 33 rupees and the state government VAT is 23.5 rupees, or 56% of the total cost. But this excise accounts for a major chunk of government revenue. Money the centre cannot afford to forfeit, especially with GST revenues much below target in the past 18 months due to COVID. So far, the government has chosen the easy route, lowering its deficit by increasing excise and burdening the consumer. The excise on petrol has risen 13 rupees in the past 2 years. But every rupee hike in fuel prices translates into higher prices, higher inflation as well. Not the most politically astute situation with elections in Uttar Pradesh, Punjab, Uttarakhand, Goa and Manipur due early next year. Bureau Report, Business Today Television.
A.K. Prabhakar, Head of Research at IDBI Capital, joining us. Mr. Prabhakar, share with us really the reason behind the consistent hikes or the consistent rise that we've been seeing in crude oil prices.
Due to COVID, crude almost came near $20. And no, in the last 18 months, if you see, consistently crude has been rising. Now we are almost trading near $80 per barrel. Now there are few things due to COVID. There are global impacts. Shale gas, which was coming from US, gas prices also has increased. So everything together is having a negative impact or a positive impact on crude prices. So that is something countries which import crude are paying. Like India and China, we are paying higher crude prices now, and due to COVID, our tax collection was very low. So state government and central government together, they have increased the tax component. So that's a huge component now. So for almost 3-4 months, the crude price also was very stable and there was no major hike. But again, when crude started to move above $73-74, the government had to hike prices now.
What kind of impact is this going to have on consumers going forward in terms of, the kind of pace of hikes that we're likely to continue to see? Clearly, no relief in sight.
See, whenever petrol and diesel prices go up, there are multiple impact on customers. One thing is your price also goes up. Let it be your vegetables or everything, because your transportation cost has also gone up drastically, and your personal commute also goes up. And if you see the data, the number of two-wheelers or number of cars which has been purchased in the last 1 year, the data is very bad. Even as we have recovered almost from the COVID data in many things, but car sales are not recovering. Or the two-wheelers, which is very important because everybody needs a private mobility. So everybody expected two-wheeler sales to move up. That has not happened. So it will have negative impact.
Mr. Prabhakar, thanks so much for joining us. Well, while crude continues to spiral, some good news in store for flyers. Airfares could be headed downwards in the coming days, with the Civil Aviation Secretary telling Business Today TV that the high and low fare bans restricting the cheaper fares could soon be gone. The fare bans limiting the high and low fares on a particular route are currently applicable for 15 days from the date of booking. For instance, the Delhi-GOA fare on 29th of September is around 7,500 rupees. It's much cheaper in December. Same is the case with the Mumbai-Kolkata flight. The December fare is less than half that on 29th September. The difference in the popular Mumbai-Delhi route is still more.
The fare bands, they do continue, but in the last version we have made a significant change. The significant change is that we have said that hitherto we used to block the fare bands would be applicable for a period of 30 days from today. Now we have come down to 15 days. Now and gradually, if we go on reducing this period, 15 days, 14 days, 13 days, 12 days, 10 days, a day would come, we'll say that fare bands will not be applicable. So the process has started. I would say the process has started, but it will be a gradual one, where the fare bands will be replaced by the normal system of operations.
Paulomi Saha joining us on the story. Paulomi, the Secretary clearly saying fare caps will only go away gradually. What's the sense that you're getting of the timeline?
Well, it's very tough to give a very fixed timeline as far as this is concerned, because as far as the government is concerned, this is a wait and watch situation for them. It is tied in, according to them, to the COVID-19 pandemic situation. So they're watching it very cautiously. They are monitoring the situation on a daily basis, and on the basis of that, they will take a decision to phase out the fare caps as well as the capacity caps in a gradual manner. So very recently, you did see that the government raised the capacity cap to 85%, and as far as fare caps are concerned, the government said that they will be applicable for only 15 days from the booking date, and beyond that, airlines will be able to charge airfares as per their own economics, because bigger airlines have been, of course, petitioning the government to, of course, do away with these caps because they believe that it is hurting their bottom line.
Thanks, Paulomi. Now, you could soon be taxiing to the next town or even city mall by air. Drone taxis or flying taxis, once a dream object in movies like The Blade Runner or Sixth Element, could soon be parking outside your very home. The Civil Aviation Secretary told Business Today TV correspondent Polomi in an exclusive interview that regulations are already being put in place for drone taxis, and it was not a question of how, but when the service would begin.
Drone taxi is I would say, is a certainty. I mean, the question is when, and the way these models are being designed, the way the research is going on, that's going to happen fast. What we have to gear up on the government side, on the regulator side, is that even these have to be regulated. These are flying aircraft. As we evolve, our rules also will have to evolve to provide a safety, I would say, a safety regulatory framework for these machines which will even carry human beings.
Now, in major defence sector reforms, a 309-year-old Ordnance Factory Board has been dissolved by the Government of India. This is in effect from the 1st of October. All its staff and assets will be transferred to 7 newly constituted defence PSUs.
"403 accidents, 27 army men dead. A loss of 960 crore to the exchequer. An average of accident a week involving ammunition manufactured by the Ordnance Factory Board." In a bold move, the government has decided to do away with the 309-year-old board. The work will instead be distributed among 7 defence PSUs, incorporated just a month ago. These comprise MUNItion India Limited for the manufacture of machinery and equipment, Armoured Vehicles Nigam Limited for transport equipment manufacture, Advanced Weapons and Equipment India Limited for weapons and ammunition manufacture, Troop Comforts Limited for apparel, YANTRA India Limited for transport equipment, India Optal Limited for electric machinery, and Gliders India Limited also for textile manufacture. According to reports, major concerns have been raised about defects, slow pace of development, production delays in ammunition made by the 41 plants run by the OFB. Besides, there have been complaints of guns not firing their full range, barrel bursts, and shortage of replacement components, all impacting operational readiness and even raising questions about their safety. OFBs also reportedly have failed to meet demand, particularly for more modern, high-tech equipment. India is already one of the biggest arms importers in the world. Besides, more and more defence needs are also being met by the private sector. The latest being the 56 cargo aircraft order to Airbus, in which 40 of the aircraft will be manufactured in India by Tata Advanced System. The move to dissolve the OFB, according to the Defence Ministry, has been taken to improve autonomy, accountability and efficiency. Dissolving OFB is a bitter move for its 80,000 strong workforce. They will be transferred to the new companies on deputation for 2 years. It will only be after 2 years that each of the DPSUs will take a call on the permanent absorption of these employees. The workers have already been striking work and protesting since the proposal was mooted. Bureau Report, Business Today Television.
Gaurav Sawant joining us on this. Gaurav, thanks for joining us. Tell us, will this make a difference? The OFB being split into 7 PSUs, how is it going to impact things, the availability, quality, cost of defence equipment to our forces?
That, in fact, Abha, is the biggest challenge. As far as the armed forces are concerned, the end users, what they need is assured supplies and quality control. So, to ensure that, the effort is to ensure that there's a corporate establishment that will deliver and that there is accountability in the system, which to a large extent the forces felt at times was lacking. One example, if I may, slightly different from this is when it comes to a Su-30 fighter jet. A Su-30 fighter jet with Hindustan Aeronautics Limited would have between 55 to 60% availability in terms of requirement of the armed forces or the Indian Air Force. With the Rafales, the company assured them 85% availability of the fleet at any point of time. Now, this is exactly what even the ordnance output is what the armed forces are looking at, that they get their weapons, their systems, their ammunition, all of that, one, on time, and two, with limited failures. Quality should be assured, time management should be effective, that there is surety of supply on time. So it is hoped that these PSUs will be able to ensure that, but there is also the requirement of a whole lot of hand-holding by the government. Now, if I may, some of the older elements may not want to fit into the establishment. So will there be a voluntary retirement scheme or a VRS to ensure that the older lot gets their privileges and then are out, and then the newer lot is able to deliver? So that will be the big challenge, Abha.
Fantastic. Gaurav, thanks so much for laying it all out for us and running us through the developments on that front. First it was Zomato, and now Swiggy is all set to deliver a bonanza to its investors. The food delivery company is reportedly in talks to secure funding at a valuation of $10 billion. US-based Invesco is likely to invest up to $600 million in Swiggy. The company, if you remember, had earlier raised $1.25 billion from investors led by Japan's SoftBank. Zomato, valued at 1 lakh crore rupees, is currently ahead of Swiggy's 75,000 crore rupee valuation. Swiggy was started back in 2014 by two BITS Pilani alumni, Sriharsha Majeti and Nandan Reddy. Both were joined by the tech face of the company, Rahul Jamini, in 2015. The three, according to reports, currently hold just about 8% of the company, the rest being held by big investors. The company is valued at $10 billion now. It was valued at just $5.6 billion earlier this July. Microsoft CEO Satya Nadella has termed his takeover talks with TikTok the strangest thing he has ever worked on. The Chinese-owned TikTok had been ordered by the then US President Donald Trump to hive off its American operations because of security concerns. Talks with Microsoft began in August last year and broke down a month later. TikTok finally struck a deal with Oracle and Walmart, which was scrapped by the Biden administration in February this year. Speaking at an event in Beverly Hills, Nadella said the whole experience was unbelievable and that he learned a lot about people and other things. The Microsoft CEO added that TikTok was very much caught between a lot of things happening across the US and China. Recalling the events, Nadella said the US government was pushing a particular set of requirements which then just disappeared. And that's where we leave it on the show today. Thanks so much for watching. Good night.